Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. And we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. Bitcoin, sideways weekend, low liquidity, and where are we in terms of the volume here? Let's go ahead and draw a fixed range volume profile. We broke this little point of control over here, went right through it, bearishly retested, and we are at a precipice to possibly come on lower to that 41K wick recovery that we bounced off of down here. Let's go ahead and see what the liquidity has in store for high block. What is, wait, hold on, custom dashboard first. Not console, it should be, wait a minute, we should do this here. All right, so what is high block capo? People lock that liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see what those crispy characters are. So let's do it now. So we go into this, set it to max liquidity. This is the 1 minute time frame. Yesterday we were talking about some shorts pools up in this region, 43,472, $189 million, just wait right for the taking. Not so much down below, so I suspect that they will manipulate higher to grab this at the very minimum. These guys that opened up into that V-shaped recovery are now in drawdown, so they're wishing for a prayer. They're hoping for something to happen in their favor as they are trapped into this breakdown into support. 315 million up here at 44, even 44,054. So they could come all the way up to the top of the range. We already put that out in terms of a projection yesterday in case you missed it. But we were also seeing some pools possibly coming up into that fair value gap up in the 45K region. First things first, though, you'd have to get to that above level zone, but by the fact that we are just going sideways and the hourly is getting overbought, we could be coming lower before we go higher. They might want to eliminate and recover this wick. If we were to extend this projection out, because it is the weekend, we could just take what we had here and just do it over time. So we had it going up from our live was here, so we said it would go up, and then we said it would go down. We had yet to go down, so maybe the next thing is down. Then we come back up, reclaim, and then go higher. So it's just delayed through time what it could be doing. It has yet to play out, but we were saying it would likely come to this wick and then make its recovery up to here. So you'd have to sweep this liquidity up first before you go into this region. But let's go to the higher time frame pools and see what is on the chopping block. The 7-day, I believe, was cleared entirely of its liquidity, as this entire range here was swept off the table on the 12th. So let's go ahead and see what is on the chopping block on the higher time frames, as the 7-day does not give any clarity as to a draw on liquidity. If we look at the 39K, there is a drawdown there. We were talking about that potential of continuing to the downside. This is what this area here is. So there is a bunch of wicks, and these entire relative equal lows that have yet to be swept could be swept up easily and efficiently. How high did they go in the retrace up here before they make that decision to go lower is the question. You got to go low to go high, and you got to go high to go low. That is how it works. All right, and let's go to the 3-month and see what is going on there. 3-month has a mighty large pool of liquidity down below. Are these positions up at that 52K using the bullish news of the ETF approval to take us lower? Is that going to be the case? We gave you that September 7th bullish drop idea since for a week now, basically telling you that even if we were to pump up, this could be a fade to retrace into the halving. Look into it more with this guy here, Rect Capital. Rect Capital has a nice post about it here, about the pre-halving period, the pre-halving rally. And where does it end up going, most likely? And so his analysis is pretty good. Check it out. Shout out to everyone here. So let's go into the charts. Let's go take a look at our levels. Nothing really changed from yesterday. So once again, on the Fibonacci, you have this 236 that's holding from 42,114. We talked about it from even back here, that if you can hold this level, you're likely going higher. Boom, we went up to the 706, had a trapdoor release on a Wednesday as I was driving back from IKEA. Boom, came to the downside, hit this wick zone of these relatively equal lows, tapped into it, just came right back, but they have yet to sweep this off the table yet. If they sweep this up, then most likely the bullish sentiment is over for the interim. So this is the last line of defense for the bulls, and basically went higher up into that deviation level we were talking about at the 1. It lined up with the daily resistance. They came up into that to the tune of 48,963 and then came back down. All right, so we're still holding the 236 and it's at a precipice. Do we go higher into this vector candle? Is it a breakaway fair value gap, or are we going to take liquidity off the table here? There is a gap. This is a 4-hour gap compressed down into the 5 minutes. So the 5-minute gap is up in here at that 45K region. We already talked about what that liquidity was the other day. If you want to know what pools are up there, there was a 170 million in this gap zone, and that's all it's doing, is it's looking at where traders open with straight into profit without trading fairly. So it goes back to rebalance that book of them getting profit without getting traded on the other side. So it might come up into those regions and take out those guys. It's not a large amount of shorts here, so it could be a breakaway because I'm not really impressed with the bubble size. Here, for example, here you see a $401 million short. So they came back on those shorts because their intentions were very strong to short. So they just came back and V-shaped into those guys, gobbled them up, gobbled their partners up, and then now started to do that as the shorts were fatigued and scared to enter. So the pools of shorts were not as strong. They started to get stronger here. So coming back into that 44K mark seems to be the case right now. If we go to the CoinGlass, this is a nice free utility. You can see where the leverage is on multiple exchanges. They have Binance, Bybit, and all sorts of other exchanges. You can OKX, you can see who's over leveraged right now. The closest chopping block area is down here. You have 141 million down at 42,291. So the overall amount is to the downside right here. So it looks like it's coming to grab some of these guys before going higher. You go to coinglass.com and /liquidation data, and you can see who was liquidated in the last 24 hours, mainly on BTC. Go to cryptobubbles.net. You can see everything's going on. The altcoins are deciding to run around on Bitcoin's behind. And yeah, that's about it. So let's go ahead and throw on our oscillators. Link in the description for more. MomentumMaster.info. Scroll down to features. You can see how it looks on the schematic. This is the schematic we look for a juicy long. And seeing this come back above the trend cloud and go higher. What is the trend cloud? You can read about it. And each component, like the baseline, stochastic array, and more. Dynamic alerts coming to your phone as much as you like. along the process, getting to those confluence levels. Okay, here we go. So we're getting these 5s and these 6s. This is kind of what we look for overall, but we're not getting rocket ships. Why are we not getting rocket ships? Well, we are not oversold on the daily and these other weekly time frames. So the weekly time frames were on a rotation to potentially come lower. So we did have a nuke up here too before this little bit of happiness happened on Wednesday. I saw it from my car after it already played out, and I was driving back from IKEA. So I was annoyed that I couldn't capitalize on it, but shout out to everyone who did see that nuke occur. There we go. Oh, it flashed for a split second, see? But we posted the link of that as it was starting to fade before it faded here. I didn't have time to look at it in depth. Let's go into a lower time frame. But we had that nuke for you during that London session. Sorry if you don't go back enough for it to calculate. It's too quick. Because it doesn't actually do it that quick in the reality. But you saw it there for a split second there. Hold on. Jump to, go back here. Let's go to the 5 minute. If you have this playback too fast, it messes up the calculations of the formula. It's looking across 7 time frames. So you had 6 time frames overbought. We came up. Okay, this was the Asian session range. Then we had the London coming up. Here we go, nukes, 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 boom! And then that was in the moment, leading indicator, no repaints. And then it came up again. Nukes, 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 boom! I was shopping, so I missed this, but it was an easy fade to oblivion. Nukes play out yet again. But I'm preaching to the choir. Those who know, and unfortunately I'm not known, so nobody knows yet. So if we go to here, we're at 6 time frames oversold, but we're not at that rotational point of the rocket ship, because if we go to the daily time frame, we still have a lot more downside projected possibilities, let's say. If we go to the 3-day, we were talking about this cross down event. What do I mean by that? Well, there's this helix that appears and this leading moving average formula called the baseline. If you look at the baseline, it's a leading moving average. It's one of the few you'll find in the market. We started to get this cross down event. We've been talking about it since December 15th, about how I could do this fake out similar to April, where it goes up but eventually retraces about 18%. Same thing happened in July. This is a little cleaner, but these cross down events do have you at hello, and they're not to be ignored. So we haven't been ignoring them. We've been paying attention, looking for this to potentially be a resistance point. And boom, we've seen the resistance. Viva la resistance. And then you go to the daily. Daily time frame has now broken the cloud, the trend cloud. One of our tools that we look at is starting to turn to 3 o'clock from 2 o'clock, and we previously bounced off it at the 236. We were like, this is a thick cloud, I don't want to short into this, watch out for your shorts. It was on a Monday, and boom, we boomed to the upside. So we're beneath the cloud, so even if we get this bearish retest of the cloud, if we fade at the cloud, then the shorts could be on for that 3940K sweep. And that is the daily time frame. The daily is getting reset on the stochastic, the money flow and the RSI beneath the 50 levels. It could very well come a little bit lower, but you're beneath the 50. We had some hidden bullish the last time we came beneath 50, so did we get some hidden bullish here? We're already at equal low point, so it's class C if anything else. The Williams resetting below the 50 level. And yeah, let's go to the lower time frames and build our narrative. On the 22 hour, you have some money flow beneath the RSI. Williams getting to an oversold state, possibly getting to that level we had back on December 30th, who knows. And going to the 12 hour also oversold, Williams getting to an oversold state. Money flow RSI at even Steven levels. You're beneath the cloud though, be wary of longing as you're beneath the cloud. The baselines cross down and are still taking time to come down here, as the baselines are far away from the price like this. This is not yet in the position to long. Here where we had the baselines crossing up right around the candle is where a juicy long opportunity might present itself, but we're not holding the baselines. They're actually crossing down, and the candle with a fury gave some momentum moves to the downside here, so watch out for any long you choose to enter. I'm looking to position into a higher probability short. We will see. And looking at the 6 hour time frame. So the 6 hour time frame also showing the baselines coming beneath the price here for that little potential pop up into this level, but not yet there on the higher time frames. The 6 hour is coming to an oversold state, leading MACD coming lower, and the stochastic and money flow and RSI at low levels. Coming to the 4 hour time frame, also having the money flow beneath the RSI. This is something we love to look at, this disparity here. What do I mean by that? Well, the money flow is down here at 16 and the RSI up at 31, and this gap between them normally insinuates the money flows up to the RSI, This is backtestably true. You can go over here and see this. This is why we overlay the money flow and the RSI. See this? You had the money flow, you had hidden bullish with the RSI above the money flow, and boom, we boomed up to the upside here. Whoop, and then we maintained and bang to the upside. So this is where you look at this disparity. Very rarely here again, we had another money flow disparity. We had the money flow beneath the RSI here, RSI up here, money flow down here, boom to the upside, and then bang to the upside with the price. So this is why we look at the money flow in juxtaposition to the RSI. Does this mean it could come lower? Is this the end? Of course it can come lower. I'm expecting it to come recover this wick, but it means it's positioning on a 4 hour time frame to potentially stab up to that region we outlined yesterday. And you got the Williams and the MACD coming down to greet the Williams. That is a position, prime position for that rising sun event. You can go back and look at where we have that rising sun with the Williams before, down here. So in August, we had the Williams and the MACD saying hello to each other, and then bang, we had some rocket ships percolate thereafter in September 11th, and then boom to the upside. So this is how you backtest things to be true, is you take data and over 2 years of it to calculate and smooth out and make these ranges that occur over and over again, and then formalize it. All right, it's not really what you would call it. It's kind of formulaic in nature, and this is why this thing will look like what it's going to do again in the future. It always ends up looking the same, fractal in nature. Okay, so coming to the hourly money flow is above the RSI, suggestive of some hourly fatigue here, the opposite end of the spectrum. As the money flow gets above the RSI, you get some bearish divergence and it dumps back down. So we're actually expecting that idea to occur from yesterday, where you come down and possibly sweep up that wick and then make your way out from there. So the money flow on the RSI, above the RSI on the hourly, suggestive, and then maybe this leading MACD comes up to the 0 point, can't break into the domain of this stochastic, and it comes back down a little bit. Going to the 15. Oh, we need to look at the cloud too, sorry. So the cloud also not starting to get thinner than it was up here, but the angle in which it's dropping is still not curving in a manner. We need to see it curve where it's starting to rotate out, and then you'd get this, you'd get this kind of tightening around the cloud zone here, and then we'd get the reaction for a potential to this region with a higher probability over here at the cloud as it curves. We're not at that point yet, but we could be. Let's go ahead and confirm with the liquidity. We still have the higher probability liquidity pool here is at 43,472, 189 million. Their partners in crime, 46 million, 109 million, and 196 million at 43,597 to sweep this entire short pool. If they go up to that, they're likely going to fade quickly rather than continue to here. If they go down to this level first, then the draw up to this may be valid. If they go up first, then they're likely going to fade even further. All right, so you need to get the energy to go higher by going lower first. If they're trying to go lower first, they're going to go higher first, plain and simple. All right, so looking at the 15, the 15 minute. Okay, so the 15 minute oversold in a state here, possibly getting that hourly fatigue playing out to draw down here for that Asia session. And you have the adaptive moving average up in here alongside the daily cloud in this yellow here that we have as resistance that could possibly bang our heads on here. This is the daily cloud we were talking about here. So this bearish retest of that daily cloud, do we break through and come on up there, or are we going to fade and come back down? Once again, if we come up to this first, then it's likely that we don't come to this and we just fade right here going down to that region. Okay, so that's what we're looking at for now, keeping things in a pocket here, an understandable pocket of where it could likely go at this point. You got a wick over here to reclaim. It did not reclaim it yet. And it did not reclaim this gap. There's not much shorts in here to muster the strength. It's possible it fades right here. Okay. All right, let's go into the total market cap. So we had the nukes print on total crypto market currency locked in on a 12-hour time frame, as did the altcoins getting that nuke lock in and starting to fade as we retrace back down on Bitcoin dominance. Dominance breaking this range, showing the dominance giving up the ghost to allow the alts to play ball. So everyone just ignoring Bitcoin and repositioning and having fun in alt territory, as the crypto bubbles suggests it's true. So the dominance dropping beneath this point, showing the alts are playing ball. This 236 for the bullish nature of dominance is disrespected, so we can go ahead and delete that. The 706 served us well twice. And this original trend-based fib level here we broke back above and we're coming to these lower territories for the dominance. We'll wait for more structure before we do that. But basically you could take a retrace from this bottom here to the top, and we could be coming down to a 706. As it stands right now, we are at a pocket zone and possibly coming to that 706 region. Okay, looking at the USDT dominance, the thing we were looking at here was we had a key zone that we were looking at from back here, a key level resistance pool, some wicks and some levels from 2021. It was also lining up with our analysis of the fibs, the bearish trend-based fibs. When it's bearish on USDT dominance, you're looking for USD to go into trades, and conversely, when it wants to go higher, as the rocket ship suggested when it wicked into our level, that it would knock people into USDT, as in kick them out of longs by going down. And sure enough, the rocket ships did play out in advance. Boom. And so are we going to see it wicked into this level too? Did not recover it entirely, but we are looking at the shallow, because it was bullish, it did not even go into this. It shallowly went to knock them out. This is a perfect example of the cloud kiss continuation idea for knocking people into that USDT. So we're just back in this range, the 236, for this bearish nature holding over here. We're in this kind of descending channel, assuming that it wants to rotate, but you could very well come down into this equilibrium point and go back in to do what we were talking about by coming down to here, knocking people out of their shorts and then going higher. So there is a basically range trade idea. It's been in this region looking to rotate, but as people take their USDT and put it into alts, that's what causes the range trade. So you're getting a lot of alt rallies as the altcoins do their thing, but the alts overall making lower highs and getting fatigued as they weaken, as people start to sniff the weakness of their greed in the air. And the fear and greed index, now at 60, was previously at 72 before the drop. So you got to be aware of when it gets in those 70s that people are extremely greedy, and that's when this happened. Boom. So do we see a little bit more greed or fear percolating in the air? The more fear, the more likely it could go higher. The more greed, the more people get duped into believing it's going higher while it drops in their face. All right, let's go see what the chat's up to. What's up, Steven? Have a great show. Thank you. So if we go to Bitcoin back again, well, first we got to look at the Dixie. Dixie has been trading in this range for the week. Pardon me. If you want to know how to do that, you look at this regression trend tool over here on your lines. You can favorite regression trend, and all you need is 2 clicks. You click the beginning and you click the end, and it will put it in a channel. Channels are something interesting because it will just tell you whether it's range bound or not and where the equilibrium point is. Another interesting tool, fixed range volume profile. You can get it over here on your projection paths. I like them better than the other range volume profiles because you can choose where it starts. You can do this and click it. Granted, there's no volumetric information for Dixie, so it won't work. And this is where indicators like Market Cipher are lying, because they say the money flow, but then their money flow is actually on Dixie. Ours does not appear because it is a true money flow, and the money flow is not available for Dixie. So if it appears on Dixie as a money flow indicator, it is a lie. Another one that is commonly misrepresented as money flow is the WADA people say this is money flow, but it's actually Bollinger Band and MACD differentials. But yeah, I digress. So if you go to Dixie, we've just been in this range bound. We could basically stab down or stab up to these gaps. It's been going sideways, allowing the NQ to take off. And on Friday we were seeing some range bound motion during the news release, so I did not trade on Friday. But it looks like the immediate draw could be to come up into these highs after trying to refuel on Monday. So maybe on Monday we refuel down to here and see how we react off this, and then possibly go higher, although we already swept it up and held. So that sweeping and holding of this fair value gap does end. This cloud suggests that we come up to this first. Okay, so don't mind our nukes that are accurate as heck. That's just par for the course. We had one on the 29th up here too. So yeah, basically coming down here and recovering this gap and possibly coming higher for NQ here. We're holding the cloud despite the selling, as people expect it to go lower. When the cloud is holding, that means there's some shorts and sellers underwater here, so they could be using their carcasses to go up here. Don't quote me on that, but I'm just looking at it at a glance here as we hold the cloud. So we're getting, possibly we came back into this gap. I was watching it, wasn't impressed with the news pop. I would have expected the news pop to take it up to here. It only took it to here, so I was like, I'm not going to play this open because it's too range bound. So I just went back to sleep, and sure enough, chop, 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 chop. Anyone who played Friday got chopped up. But we did not play that game. See, no trades taken. And then also the day before, we had about 474 ticks locked in, so we just know when the sentiment is going to present opportunities or not. And since we didn't really convict to a move up here, I didn't feel like we were going higher. It needed to go up and take this immediately, like it did here on this news play. This news play hit a point of interest, and it was literally in the fraction of a second. It went beep boop, and I was like, whoa, I didn't even have time to put a limit order in, and it just came down to here. So this conviction gave more juicy opportunities for shorts and long V-shaped recovery plays here, which is why we took them. Here was very minimal by comparison, so it was telling me a seek and destroy profile was going to occur. All right, so where do we see ourselves going for the week? Monday is a holiday, so this is going to be on Tuesday, so it's likely going to be somewhere after that. Dixie also probably has no news. Let's go check out the news for the upcoming week. Forex Factory. Nothing yet projected, but we'll figure it out. My man Rainier posted a nice indicator regarding the news plays. You have basically, where is that news? I'll find it later, but there's a news indicator that he was sharing. Let's go see, it's here. Live economic calendar by 2 degrees, indicator by 2 degrees. It will post some news on your chart and where those folders occur. So if you're having trouble keeping up to date with the news that's coming, interesting to check that out. All right, so in a nutshell, let's wrap it up in a nutshell and bid you adieu. So here we go. So in a nutshell, we have BTC trapped in this range here. You can use the regression trend tool to see that clear as day. And also this is getting to the point where it is displaying the schematic of 5 and 6 time frames oversold. Do we get a pop off of those 6 time frames oversold? I would be waiting for a sweep of the liquidity if that's the case. Now, I told you if we go up first, then we're likely going to fade and come down to here. You do the fade first, the feint, the ambush to one side before the real one occurs. So if the ambush is to here, we're going here. If the ambush is to here and fade, then we're going down to here first. Ultimately, I'd like to see a short down to here, but it's about where we're going first. Let's go ahead and I actually have a TOS open today. A TOS is also a footprints chart. If you're interested in footprints, you can get into where you could possibly long. For example, here there was 79 Bitcoin sold, 80 Bitcoin sold down here at the value area low for the day. And this negative delta, you previously had 332 negative delta. What is the delta? Well, there's a video about it, a quick guide that I put out. You can check out. It's only 5 minutes long, learning what delta is. Aggressive selling, aggressive selling, aggressive selling. So we had aggressive selling to the tune of 400 Bitcoin lost here. Most likely those are sell stops for longs. So when you watch these negative deltas occur, and then this aggression, was this aggression of sells being rewarded or punished? So here they were hunting the sells again. You had 152 negative delta, 311 negative delta. So right here you had stab down, reacts, stabs down a second time, starts to come back, and it's not rewarding these guys. And so you can use this as absorption. This is the idea of delta absorption. There's some limit buyer whale putting their limit buys in here and just letting the sell stops feed their order to disguise it at the value area low. And then it starts to react off of their corpse. And now you're seeing some sells come in, sells come in, sells come in, and then are they getting rewarded or punished? Sells come in, punished. Sells come in, punished. Sells come in, going up, punishing them. So who's in control? The buyers. So right now the buyers are in control, just off my quick analysis of the footprints. Value area low had a nice little negative delta double bottom here, and we're starting to come back up. So I would look for this to do the up path first, coming up to those pools that we outlined. So we're coming possibly higher to those pools, at least in the interim. And looking at high block, you have those pools up at 43,472 to take. We have these guys. I'm not interested in trading the weekend, but just like to be accurate nonetheless. So 43,597 to grab those pools. If they grab them first, then you can look to see that potentially fade at that point. But it's all about the interest it generates. There's so far no long interest here, so they could just keep drifting into the shorts. All right, let's go see if you have any questions, comments, anything like that. No? So we got the 5 and 6 time frames oversold. We'll see how it plays out. Hourly time frame, cloud not curving just yet. We'd like to see it curve. I'd personally like to see it come down, recover the wick one more time and test the sell side, but it looks like it has already done that on the 5-minute time frame. That's what that pre-market candle, what we just saw with that sell-off here, this high volume sell-off, these candles here. These are 5-minute candles. So these were some auctions where people sold off their Bitcoin to a whale that absorbed it, and now it's going higher. All right. So if you see a bunch of buys hit, aggressive buys that get punished, then that's shorts being popped, forcing them to buy at market buy as their account gets liquidated. So noticing what a market buy and sell looks like at the bottom. Market sells at the bottom look like this, because who would sell at the very bottom like that other than somebody being liquidated in their long up here? And here's where you see the opposite true, where a bunch of sells come in, it pops up, tries to do a buy stop, doesn't hit anything, just hits more sells and rewards the sellers. And so the sellers are in control, and the sellers go down, hit some more sells, stops of the longs, and then starts to shift out. So the sellers very well could be still in control here. We're at the value area high for the day. And the footprints is more of a scalper's tool. That's why I use it for NQ, because you can catch these beautiful slide into profit opportunities. You can try this out for 14 days for free. I think Bitcoin is free thereafter, so if you trade crypto, you can look at this with crypto for free after that. I'm not sure about that, but yeah, either way, 14-day free trial, link in the description. We'll try to keep this up for opportunities in the moment too. One other free indicator, because we're feeling generous, is this liquidation levels by ML application. Set your threshold to 0.1. So you can see every $100,000 trader, these $100,000 long 100xers will likely get swept up. There's more interest generated than the shorts above. So this looks like a fake out. The seller's still in control, possibly rejecting off of this to come lower. So we had this initial reaction. It was very lackluster, not full of volume, and so we could reject off this and start making our way lower. The Asian session is not known for pumping, it's known for fake pumps that fade. So Hong Kong is known for fading it into London, so I would look for this fade, and our initial analysis can be correct coming down to here. So they're inducing some longs by the looks of it on this ML application, perpetual data fed into TradingView. All right, and that is my story, and I'm sticking to it, folks. If you have nothing to ask for, then that's my time for you. So thank you for coming on into the live and sharing your essence with me in this eternal moment, of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip side.